$250 billion. Paying $250 billion for xAI is just Elon moving money from his right pocket to his left.
Oh, come on. Sullivan and Cromwell didn't bill thousands of hours just to help him switch pockets.
Maya, overall deal volume is down 17%. The entire market is basically a mirage propped up by this insane AI megadeal spike.
True. But when a single transaction anchors a $1.2 trillion quarter, I need to see the math. Let's look at how they actually price this monster. The rundown.
So overall transaction volume actually dropped 17% in Q1.
Which sounds terrible until you look at the actual dollar value. We just crossed 1.2 trillion for the quarter.
Because the middle market is taking a nap while the mega deals do all the heavy lifting?
Exactly. It's a barbell market right now. Speaking of the middle market though, WTW just finalized buying FlowStone Partners.
Expanding into private equity secondaries. Smart. The secondary market is where all the actual liquidity is hiding right now anyway. If you can't IPO, you sell your LP stakes.
It's a totally logical bolt-on. Unlike Soluna Holdings, which just closed a $53 million deal to buy a wind farm in West Texas.
The Briscoe Wind Farm, 150 megawatts of pure vertical integration.
I read that press release 3 times. Are they a tech company or a utility now?
If you run data centers, you're basically a utility. You need power. Buying your own wind farm is actually a brilliant hedge against the grid.
I guess. It just screams early 2000s conglomerate building to me. I prefer when companies stick to things we understand, like crypto SPACs somehow rising from the dead.
Oh, come on. CoinShares is gearing up for a Nasdaq debut. They actually finished their SPAC merger.
Wait, really? A crypto asset manager successfully despaced in this regulatory environment.
Miracles happen. RYVYL and RTB Digital also just got shareholder approval for their merger. Another combined Nasdaq listing on the way.
The public markets are getting crowded again, which brings me to the gossip you've been holding out on.
Okay, yes, whispers on the street. Estee Lauder and Puig are deep in negotiations.
For a stock-based tie-up.
Predominantly stock, yes.
Nate, that's absurd. Estee's stock has been absolutely hammered. Why would Puig take that paper?
Because it's cheap, you sell them the narrative of a turnaround. Plus, tying up with Puig gives Estee the prestige fragrance portfolio they desperately need. It preserves cash.
I'll believe it when I see the exchange ratio. I think Puig walks. Keep your eye on Gilead tomorrow, though. The clock is ticking on that extended tender offer for RSLX.
We'll see if they actually close it. But we can't put it off any longer. We have to talk about the $250 billion elephant in the room.
Sullivan and Cromwell must be throwing a parade right now. The big one...
$250 billion. I just need to say it out loud a few times so my brain actually processes the zeros. $250 billion.
And yet, if you look at the actual structure, it is basically Elon shifting poker chips from his left pocket to his right pocket.
Oh, come on. You cannot reduce the largest tech acquisition in history to a pocket trick. SpaceX buying xAI is a massive play. It is the ultimate vertical integration. You need the world's best AI to navigate orbital logistics, and you need SpaceX's capital engine to fund the massive compute costs.
I am not arguing the tech synergy, Nate. I am arguing the valuation. $250 billion is a complete hallucination. There is no real external price discovery here. It is a closed loop of equity.
Sullivan and Cromwell advised on it. You think they are just rubber stamping a hallucination?
I think Sullivan and Cromwell are currently popping champagne over the highest billable hour event of the decade. They do not care if the valuation is made of fairy dust as long as the legal fees clear.
Okay, point to Maya on the lawyers. But look at what this Megadeal just did to the first quarter numbers. We officially crossed $1.2 trillion globally.
Right, but you have to read the footnotes on that $1 trillion surge. Overall transaction volume actually dropped 17% in Q1. The middle market is practically frozen right now. The only reason we hit 1.2 trillion is because of this insane 319% year-over-year spike in billion-dollar mega deals.
A 319% spike. That is not just a trend. That is a panic. Everyone is terrified of missing the AI boat.
Exactly. The entire market is being propped up by AI-focused equity investments. If it says AI on the tin, boards are writing blank checks. If it is a traditional business with actual cash flow, nobody cares.
I think you are being way too cynical. It is not just hype. Look at the macro picture. Geopolitical volatility in the Middle East is threatening cross-border supply chains again. Companies are realizing they need to own their entire tech stack. You either buy the capability outright or you get squeezed. SpaceX gets that better than anyone.
Buying capability to protect your supply chain is one thing. Paying $250 billion for an AI startup is another. That is not strategy. That is a bubble looking for a pin.
Spoken like a true skeptic. But when you are playing a game of planetary scale, the price tag is just the ante. And honestly, this mega deal fever is contagious. Boards are seeing this and suddenly feeling very brave about testing the antitrust waters.
Which brings us perfectly to the whispers we are hearing in the consumer space. Because tech is not the only sector trying to push massive tie-ups past the regulators right now.
Are we talking about the Estee Lauder and Puig rumors? Because I have thoughts. Voices.
I'm looking right at that analyst note, and they're completely missing the point. Yes, Q1 crossed $1.2 trillion, but overall transaction volume dropped 17%.
You always do this. You look at a record-breaking quarter and find the one dark cloud. A 319% spike in billion-dollar deals isn't a dark cloud, Maya. It's a thunderstorm of cash.
It's top-heavy. The market is being propped up by Elon throwing $250 billion at his own AI company. Take out SpaceX and xAI, and what do you have? A very quiet, very nervous middle market.
I disagree. I talked to these sponsors. They aren't nervous, they're just shifting strategies. Look at the other analyst note going around this morning. Everyone is screaming about Middle East volatility tightening financial conditions and killing cross-border deal timelines.
Which is entirely accurate. Supply chain panic is back.
Is it because the loudest whisper on the street right now is Estee Lauder and Puig advancing talks on a massive tie-up, a US-European cross-border beauty giant?
Wait, really? Puig just went public like a minute ago.
Exactly, and the rumor is it's a predominantly stock-based deal, so much for cross-border being dead.
Okay, I'll give you that one. A stock-heavy beauty merger is a bold move right now. But notice who isn't using stock? Private equity.
Oh, the PE guys are licking their chops.
They are. I've been tracking the filings and they're quietly circling vulnerable public companies for take-privates. They want to bypass the volatile public markets entirely, unlocking value behind closed doors, which is banker speak for firing the board and selling the real estate.
Hey, I resent that. It's also banker speak for cutting the marketing budget. But speaking of boards getting nervous, we need to talk about Gilead.
The clock is ticking on that newly extended RSLX tender offer.
It is. And with regulators starting to push back as boards test the waters with these massive mega deals, we have to ask if the antitrust window is finally closing. Spill the tea. Okay, but tell me you heard the whispers about Estee Lauder and Puig.
I heard them, but I refuse to believe anyone is doing a massive, predominantly stock-based beauty tie-up right now. Have you seen Estee's chart?
That is exactly why they want to use stock. If your currency is depressed, you try to convince the other side it is a value play. Total banker move. I used to pitch that exact deck.
But Puig just went public last year. Why would the founding family trade their shiny new equity for Estee paper? Unless they know something about the turnaround strategy that the rest of the street is missing.
Or they are looking at the private equity vultures circling right now and deciding they need scale. The PE sponsors are getting aggressive, Maya. They are quietly mapping out take privates for every vulnerable mid-cap consumer brand out there. They want to bypass the volatile public markets entirely.
I am calling your bluff on that timeline. PE wants to do take privates to hide behind closed doors, sure. But look at the macro data from this morning. Geopolitical volatility in the Middle East is threatening cross-border deal timelines. The debt markets are going to tighten up before these sponsors can actually fund those buyouts.
You always ruin my gossip with macroeconomic reality.
I just read the footnotes, Nate. You want to talk about scale? Fine. But no PE shop is doing a $20 billion take private when supply chain pressures are flashing red again.
Fine, I will concede the financing risk, but the beauty consolidation trend is real. Someone is going to get bought.
We will see. Honestly, I am more interested in the deals that are actually on the clock right now. Speaking of ticking clocks, Gilead just extended its tender offer for RYVYL again, and I have theories on why the board is stalling.
Oh, I love a good stalling tactic. Tell me everything. Tomorrow's radar. I'm telling you, watch Estee Lauder and Puig tomorrow. The whispers on that massive stock-based tie-up are getting loud.
A stock tie-up right now, with overall Q1 volume down 17%. I need to see the S4 before I believe they actually sign that.
Volume is down, sure, but mega deals are propping up the market. Boards are testing the waters. They're getting brave again.
Brave or reckless? Look at Gilead extending their tender offer for RYVYL again. The clock is ticking tomorrow, and regulatory pushback is very real. You can't just ignore antitrust because you want an empire.
Oh, come on. That's just standard regulatory friction. If you want real drama, watch the PE sponsors. They're quietly circling these vulnerable public companies for take privates.
Only if financial conditions hold up. Geopolitical volatility in the Middle East is already threatening cross-border timelines.
Fair point. But if CoinShares can successfully debut a crypto SPAC on the Nasdaq tomorrow, anything is possible.
A crypto SPAC in 2026? What could possibly go wrong? See you tomorrow, Nate.